Now, everybody's probably wondering, is crypto, from the thumbnail, obviously, in the title of this, is crypto about to crash? Are we about to see crypto go to 97K or even 94K or even, 88K like I was talking about yesterday, or even potentially, right, 74K, God forbid, right? Is that going to happen? We're not 100% sure yet, but what I'm saying is that if you look at the charts, and remember, we are traders. We are here to do real trade, real-time analysis, right? Real technical analysis on the charts, okay? Because of that, we have to pay attention to only what the chart is telling us, and that is it. We cannot pay attention to anything else, okay? So let's talk about the bearish patterns that are printing on crypto right now. Let's talk about the massive trade that we just took literally yesterday that made us $2,000 in 24 hours. Literally one trade for $1,000 made us $2,000, okay? And then let's talk about where we could be potentially going from there, right? Because this thing, this thing could get nasty, man. This thing could get absolutely nasty. And it could get really, it could be going down. It could be going down pretty fast, is my point. So let's get into the technical analysis behind it, and let's talk about it, right? Because this is, dude, this is serious. Now, first and foremost, I want to share the screen and show you, bam. Okay, now, first and foremost, we took an absolutely just nasty, just pure filth short the other day. And man, we killed it on that short. And this is a short that I gave out live inside of the private VIP trading room, right? That anybody with $1,000 could have literally taken this trade and made $2,000 off of it after we gave it out. I believe it was Monday or Tuesday we gave this trade out. We'd been waiting for this level. Spoiler alert, short synopsis of it. We'd been waiting for this level to get hit for a very, very long time. And you're probably wondering, like, what is that level? Well, first and foremost, the level was about 113 to 114, okay? We took the short. We absolutely killed it, man. We absolutely killed it. I need to see if this is live right now because, dude, this is like, I've never seen a stream have less people on it than this one. Ever. Yeah, no, it is live on Twitter for whatever reason. This is my first try at streaming this on 3 different platforms at the same time. So I'm streaming it on the Drew Wolfer YouTube channel. I'm streaming it on my backup Drew Wolfer YouTube channel that should not be shadow banned. And then I'm streaming it on Twitter all at the same time, trying to work out the kinks, trying to work out the bugs. We'll see if it actually hits and what platform it hits on. But as it sits right now, it looks like there's only a couple of people on here. We'll wait for the Twitter people to start filing in. Okay, yeah, it looks good now. Okay, great, cool. Yeah, I don't know, something about StreamYard and like trying to stream on multiple platforms at the same time, even though that's the whole point of StreamYard, right, is to be able to do that. For some reason, it doesn't do well with that. So yeah, let's talk about it. So here is the trade that we took last week. Absolutely killed it. Just absolutely murdered it. Not last week. It was this week. It was 2 days ago. Bang, baby. Bang. And now we might be getting a nice little retest of a secondary bearish charting pattern. So let me show you what this bearish charting pattern was, right? It was the 1 day rising wedge. It's a very simple one, right? It's very simple. So we zoom out, when in doubt, zoom out a little bit, right? Bang. Bearish rising wedge pattern, right? Very simple to see, very cut and dry, okay? When you reject from a pattern like this, and then you come back in and you retest it, man, that is a powerful move that you can take down, right? Secondarily, there was an order block up there, okay? And I'm going to show you this order block right, right? Bang, look at that order block. Boom, we tagged the bottom end of that order block, and then we just fell. We made $2,000 by shorting $1,000. It was nuts. It was absolute insanity. I can actually show you the trade, right? Right there. This is what we did. We shorted $1,000. We put $1,000 on the position. We made $2 grand off of it in literally 24 hours. We shorted at 113.4. We closed it at 109, right? Absolutely killed it on that trade. Why? Because we knew we come into this order block. We come up to back test the bottom end of the breakdown because we got a confirmed breakdown here. We come back, we bounce from the 200 moving average. We come back and we back test that, man. If you don't regain that moving average immediately, that 200, it's super bearish, right? But as you can see, every time we regain this 200, we just come right back down and lose it again. We just come back right down and lose it again. Then we regain it. But the problem is that if you keep setting lower highs every time you regain this, this becomes extremely bearish. And this is where the market could absolutely crash out and just go down. Like you wouldn't believe. I don't know how more I can illustrate this to people, right? Other than by doing this. Bang. Does that look like a potential head and shoulders pattern? Let's get this order block off of the screen really quick. So indeed it does. Indeed it does. And we need to get this off of here. Okay. So this is what is called a head and shoulders pattern. As you can see, we set a high. This is your first shoulder. We set a higher high, which is your right shoulder or your head, which is about 2 times as high as your shoulder. Then bang, you got a lower high here, a lower low, bang, and you got your head and shoulders pattern. Now, if you want to be like super, conservative with it, you can say this is your head and shoulders. Like you could say that's your head and shoulders and your real breakdown point is there. I think it's here. Right? Even though I don't necessarily like the fact that, your candles are all the way down here, but this could be your back test, right? Or if we were to take it down here and say, you know what, here, this is our head and shoulders, right? This is our head and shoulders. We like this better. Okay. This is where we would have to say, okay. Boom, right? This could be your head and shoulders right here, right? This could absolutely be your head and shoulders right here. Okay. So once you break down below 105.3, it gets extremely bearish from there, right? Now, does that move the needle on this head and shoulders pattern? It absolutely does, right? It absolutely does. It would give you more of like a $94,000 target instead of $97,000 target. But what's the big difference? Not as much of a huge difference, in my opinion. In between 94 and 97, right? If you're shorting, what's the difference between 94 thou wow and 97 thou wow? Not too terribly much. So yeah, it's just, you got to take it with a grain of salt, and you got to understand, that there is the potential that this thing just absolutely just gets murdered, right? This thing just absolutely goes down. And there's the obvious potential that we can go up from here, okay? But here's the problem. Okay. And this is from a market structure perspective. First and foremost, we are riding the crap out of this 200 moving average. That's extremely bearish in any scenario, man. Riding this 200 moving average, the more that you bang, bang, bang on a level, the more likely it is to break either up or down. Okay. So when we're just keep beating down, like say you're standing on, I don't know, like a piece of wood, right? And you just keep, right? Eventually that wood is probably the integrity of the strength of that wood is going to start breaking down each time you come and just bam, slam down on it. And eventually it's going to break. Okay. That's the same thing with these moving averages. That's the same thing with any key level. The more that you hit it from the upside to the downside, the more likely it is to break down. The more times that you bam, 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 uppercut it from under it, the more likely it is to break up. Okay, so we've hit this 200 moving average. Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9 times in the past 2 weeks. And we've done it 8 times in a row. Something has to give. Either you got to pump out of this like to a nasty, just almost like filthy degree, right? And you got to come up here and take out these highs at 116, or you're about to dump out, man. And you're coming down first and foremost, take out this low and this low. And if you get a swing failure pattern down there, cool. You can start thinking about longing. You get a swing failure down here, cool. You can start thinking about longing, right? Especially if you get a bullish divergence at either of these two lows, right? You get a bullish divergence, great, even better. Swing failure pattern, bullish divergence, bread and butter setup, right? Bread and butter setup. And we can also go back here and look, and guess what? Why did we bounce here? Does anybody, okay. If you go over here and you just look left, can anybody tell me, drop it in the comments section if you know, can anybody tell me why we bounced there right here at about 101? Can anybody tell me? If you guessed, I'm going to give people another second. Just try and type it in the comment section if you happen to give an F and you know why we bounced right here at 101 whenever that big Trump dump, the Trumpity Dumpity came in. I'm going to show you. It's this bad boy right here. That is called an order block, my friends. Okay, so let's get the magnet tool and I'll show you. Bang and bang, right? And guess what? That order block can technically go up to about right here. So, wondering why we bounced here? Bang. Wondering why we bounced here? Bang. Order block before this big ass move up, right? Wondering why we bounced over here too, right? Same exact stuff, man. Same exact stuff. The markets tend to repeat themselves over and over and over again, right? Let's get it. Bang. And let's move this over here. Boom. Bouncing, 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 right? So that's what you got to pay attention to, man. You got to pay attention to these little order blocks. That's where you're seeing a footprint, digitally speaking, right? Where all of these institutions are deciding, hey, we're going to load up here, right? So this is one day OB, right? One day OB. Let's take these off and let's see if we can pick out any others, right? You can pick out any other order blocks over here. If you know what an order block is. If you don't know what an order block is, get into the foundation, man. I teach you exactly what an order block is inside of the foundation. That looks like an order block to me. We just pumped through it. Are we going to get a rejection here on it? I don't know. We'll see, right? That looks like an order block to me for sure. Boom. Big ass move up, man. Big ass move up, right? Even this right here would technically be an order block, right? You're looking at that. That's an order block too, right? So my point is you got to watch where these things are happening, okay? You got an order block up here at the all-time highs. Bang, right there. Boom, okay? You got to pick these things out on the chart, okay? You got to pick these things out on the chart. It just says what it is. This is an order block too, right? Right here at about 117 all the way down to about 116. So if you're wondering why 116 is going to be such a crucial area for us to get it, to reclaim, well, there's another reason why right there, right? Here's your order block before your big move down. And then boom, as you can see, immediate rejection and bang. We'll see what happens once we get up there, but you're going to have two chances, right? Here we go. 1DOB. 1DOB. Okay. By the way, if anybody is here on YouTube, let me see if anybody's here on YouTube. If you're here on YouTube, the original Drew Wolfer channel that you're probably watching on is 100% guaranteed shadow banned. Okay. So a lot of people aren't getting notifications, and I have another Drew Wolfer channel, and it is the first, it's in the description. The link is in the description. It's called Drew Wolfer Official. Go subscribe to that because eventually I'm going to migrate all my content over there because I'm not doing this for no reason, man. Like, I'm not going to be out here streaming to 4 friggin' people because YouTube doesn't want to recommend my videos to people because they shadow ban me for talking about something that I might not have, shouldn't have talked about back in the day in one of my little conspiracy videos. So if you're here, just scroll down and just go follow that Drew Wolfer channel. Just hit the subscribe button and bang on the notification bell for me. Boom, baby, bang on that notification bell. Anybody that's here on Twitter, make sure you scroll up, just hit the follow button. I literally do this every day. I give people the technical analysis. We give out a lot of trades for free every single day as well. And yeah, just go make sure you go subscribe to that channel. Seriously, I appreciate you. Now, let's talk about what we could see potentially happening, right? So you got two potential entries here. You got this one right here. If we confirm below this level. Now, you got to break above about 110.2, 110.3. If we close above 110.2 or 3 today, you're resetting this entire pattern all over again, right? Secondarily, that's where you got to start thinking about, okay, do we take a long here, right? Secondarily, you're going to have a secondary entry right up here at about 113.5 to 114, okay? For a short on this rising wedge, because this rising wedge, it did not break down, okay? I mean, it broke down, don't get me wrong, like it broke down, but this is the target on that. It's like 95,000. It didn't even come close. It didn't even come close. It came to 101, $97,000, $95,000. It's pretty friggin' far away, right? It's pretty far away. If anybody is in here and you have taken any of the trades that I give out, tell me, right? Drop it in the comments section. Let me know if you're taking any trades, because I'm giving out like a dozen trades every single week, and they be hitting. And I'm wondering, like, is anybody actually taking the trades, right? So let me know. Let me know if you're taking any trades. Let me know how they're working out for you. I know inside of Nordic Alpha, dude, we're absolutely killing it. And if you want to get in that community, it's only $29 a month. It's literally less than $1 a day. You would have made 7 years worth of subscriptions if you would have just taken that one trade that I gave out 2 days ago, right? Made $2 grand in 24 hours. Insane, right? So let's see what happens here on Bitcoin. But my point is that everything under this is still bearish. You really got to get above 114 to be even close to bullish again. And technically speaking, you got to get above 116 too. Like, it just is what it is. And I'm not going to sit here and try and like this is not hopium. This is a Maduro cigar. I'm not smoking hopium. And I also don't deal hopium. So if you came over here for hopium on this channel, you know, it's not. We're not going to give it to you, because I want to keep it real with people. I want people to understand you got to let the technicals tell you what's going on, man. Now, I'm not saying that like it's all doom and gloom, because although I say you got to get above 116 to like remain bullish, to get bullish again from a short-term perspective, dude, all you got to do is stay above 95,000. Not even. As it sits right now, say we were to just tank out today, you just have to stay above $93,000, which is this upward trend line that dates all the friggin' way back here to October of 2023, 2-year-long uptrend line. You just have to stay above that. You just have to stay above that. That's $93,000. We could literally go down to $93,000 and still be bullish in crypto right now. So I don't want people to see like crypto about to crash, bearish patterns, you know, live Bitcoin analysis and whatever, and see the 97K thing and be like, oh, dude, crypto's over. It's not. That's what everybody always thinks, right? Everybody always assumes the worst, right? Can we check for a short on ZEC? We sure can. Taking a SBIT to short Bitcoin. Yeah. Let's see. I mean, we got to see what happens. We got to see if this confirms, because this is a daily charting pattern. Because as it sits right now, you're right in the middle of a friggin' range, right? So we got to see if this confirms, and then we can start thinking about it, and then we can set our stop loss extremely tight, because we know we have a second chance at this up here at 114. So in my opinion, if you're going to take this, right, this bear flag did not play out, by the way. It still hasn't played out, which is kind of annoying, but whatever. One day head and shoulders, if you somehow get your close under this level, under like 110, all you do is you just set your stop loss outside of like 110.5. So you're literally taking like less than 0.5% in terms of risk to then get, you know, dude, I mean, up to like a 13% reward here. I mean, that's like a 26x risk to reward ratio on this trade. And then say that doesn't work out. Okay, fine. You lost 0.5%. Big whoop, big deal, right? Because now we can just reposition right up here at 113.6 to 114, right? It's great. I'm fine with it. You know, the risk to reward, it balances out, okay? So that's my point. If we go down to the 1 hour chart, we're going to see a little bit better, a little bit clearer of a picture, right? So this is essentially going to be your range, right? Where's my FRVP tool? That's essentially going to be your range, right? And you can take it even further if you want. You can just drag the whole range, right? If you really want to, that's fine. It's going to give you the same exact data for the most part, right? And as you can see, as soon as you came up here, bang, you tagged the value area high, you closed outside of it for 1 hour, and then you just boom, just blasted through. So you want to know why we took that short? Well, we had the 1 day order block, right, that we tagged into. We swing failed these highs, right? We smacked into the value area high of the visible range, right? The one that was actually local, your local range. And then boom, you blasted down. Took it right down to the point of control at 108, right? Pumped up a little bit. I stopped out here at 109. Took my $2,000 off the table. Boom, came down to the value area low. Bang, bang, bang. Now we're working our way back up. Now, do we see another kind of situation where we work our way back up, we stall out before we get there, and then boom, we come back down to the value area low? I mean, it's very possible. It's very possible. And these ranges, the thing that you need to understand about these ranges is they develop, okay? They develop as they go. You're not going to see a range and be like, oh, this is the range, this is it, this is all it'll ever be, right? So these ranges will develop as you move, right? And this is kind of a, I'll show you something really quick. So this is your high and your low, right? But let's click on this fib really quick and let's do a new template, right? I want to do a different template. Where's the zero? My bad. Okay, so you've got 0 up here, right? You've got your 1.0 right here, right? You got your 0.75, which is going to be essentially your extreme discount zone, right? Then you've got your equilibrium, which is your 0.5, and then you've got your extreme premium zone, right? So you don't do anything until you get there, right? And we can save this as a template. Give me 1 second. Let me do it. And you don't even have to take it that far, right? You can just say, I'll take my equilibrium there and I'll do this, right? Just make it blue. Just make them blue. That way you don't even have to worry about it, okay? So here's what I'm talking about. Let's get this order block out of here, right? Where's my FRVP? Right here. Okay. So as you can see, you got into your, what we would call extreme premium zone. This means sell, right? This means a lot of people, you're going to be selling up here, right? Then you came down and tagged exactly the discount zone, right? And right now you are trying to figure out what the hell you're going to do. because you are at the equilibrium price, the 0.5 zone, right? This is your 0.5. This is your 0.75. Once you get up here, this is called the premium zone, right? Where you can start thinking about going down, right? Whenever you get into this zone. As you can see, you got into this zone right here, you went down. You went back down into the discount zone, boom, came all the way up to extreme premium. You sold off, came down into the discount zone, and almost made it to the extreme discount zone, right? Then you came back up to the 0.5, which is equilibrium price. And now we got to figure out, are we going to go into discount or are we going to go into premium, right? And for that, give me 1 second. Let me get this trade off of here. For that, we just got to zoom in a little bit, man. As you can see, we're above VWAP now, right? We gained VWAP. We came way above it. We came back tested it. We're getting above it again. Are we going to swing fail these highs and then come right back down? Because you've got the 200 moving average right here, which is the green line, the 50 right here, which is the blue line, the 100, which is the red line, and then your VWAP line is just right here. It's very simple, right? And I can actually make the visibility on this a little bit more, right? Like this, right? That's VWAP, okay? Save as default, bang, okay? So your VWAP line, as you can see, is right here, and you're above it, which is volume weighted average price. This is a key level everybody has to pay attention to and take into account, okay? So when you're seeing all these moving averages and you're above them, right, and you just regained them, but look at the last couple times you've regained them. Bang, regained it, bang, regained it, bang. We could see us come right back down under them, right? Now, in the same sense, you can see yourself regain them and just start trending up, right? But whenever you see a big rounded top right here like this, and then a subsequent fall back to the prior swing lows, and then you come up, set a lower high, and then start taking those swing lows out and then set another lower high, your probabilities are saying, hey, man, you might continue going down here a little bit, right? It's not a guarantee. I'm saying probabilities, okay? It is more probable, okay? But when you are in a range like this and you're right in the friggin' middle, it's really hard to say, oh yeah, I'm going to take a trade here, right? And let's take all these moving averages off, make it even simpler for people, right? You've got VWAP on here. Let's take VWAP off. Screw it, right? When you're in this range, this makes it very simple for you. Equilibrium, premium, discount, right? That's all it is. That's all it is. 25% to 0% right here. 25% to 50% right here. 50% to 75% right here. That's your premium. And then 75% to 100% of that range, that's extreme premium, saying, yo, you got to sell here. Or if you deviate outside of this range, you got to make the range bigger, right? So my point in saying this is you're right in the middle. You're literally at the 50 line, okay? Now, the only thing that I will say, regular traders, dude, retail traders that haven't been trading for a long time and you don't understand the market in the way that, professional traders do. You have to stay away from trading in this range. You're right in the middle. This is where you're going to get chopped up. Now, professional traders, on the other hand, do tend to trade inside of these ranges. Why do they do that? Because they see things like what I'm seeing, right? This bad boy right here. The rejection from the head and shoulders, right? A secondary potential subsequent rejection, maybe a swing failure here, and then boom, blast down to the discount section, to the bottom end of the discount section, to maybe potentially get into the extreme discount section, right? They see stuff like that, right? They see things like these order blocks, right? Where you come up, you test it, boom, you fall, right? They see things like all these different order blocks, bang, that we are trying to uphold right now. And if you reject from it, you're going to fall, right? You're going to fall, okay? Secondarily, they see all of these different things, right? And these are the things that I'm talking about, okay? All of these different order blocks, right? All these different order blocks. Look at this one, right? That's a 30-minute order block. Look at this 1 hour order block, right? Right under it. And then look at the 15-minute order block right above it. You've got a lot of key levels here that you can trade, but you have to be experienced enough to understand what those levels are and why they friggin' matter, right? And then you have to understand what I call H-lock, highs, lows, opens, and closes, as well as volume profiles, because the volume profiles are what is actually going to show you where the tradable places are. And right now, if you look at this volume profile, dudes and dudettes, homies and homettes, and non-binary people alike, we are officially in no man's land at the equilibrium 0.5 price of this move, right? And secondarily, we are above the point of control, which is the equilibrium price of the volume that happened inside of this entire range, right? Whoops, I just moved the wrong thing. That is my fault. Yeah, this entire range. Bang. Look at that. This is your equilibrium price. You like to be at equilibrium. That's why you're hanging out here at the 0.5. That's why you're bouncing at the 0.5. That's why you're rejecting at the 0.5 and hanging out there, right? That's why. You like to be at equilibrium. That's why you see it. Return down to the point of control. Get up here. Reject from the point of control. Come back, come back, come back. Hang out at the point of control for so long. Get extended, come back, right? So that's why we see these things happening. And if you're not a pro trader, you might not necessarily be able to pick those things out as easy. And that's why we always say, hey, man, if you're not a pro trader, don't be messing around inside of here, man. Don't be messing around inside of here, especially at the 0.5. Now, I'm not telling you not to short, right? Especially whenever you see larger terms, things happening like this stuff right here, right? You're one day head and shoulders and you're, potentially rejecting. But my point in saying this is just wait for your confirmations, man. Just wait for your confirmations. Your confirmation today for a move to the potential downside is going to be a close under $110,250. That's it. That's all you do. And if you want to start nibbling, I get it. I totally get it. But I'm not telling you to do that. I would actually tell you to do the exact opposite. Don't nibble. Wait for the confirmation before you do anything. Because what I can tell you is that when you try to front run levels, you get wrecked. You get absolutely demolished. And that's why we tell you don't trade in this range, right? Near the 50 line or in between the 0.75 and the 0.25 line on this range. Now, does that mean that I'm going to tell user-lie2pp8nfr24 2r not to short? No, dude, do whatever you want, right? But my point is that leave room for you to be wrong, because you could be wrong all the way up here to about $114,000. You could be right in your directional move, but you could be early here is my point. So leave yourself room to be wrong and either stop out when you know you're wrong, right? Which would be above about 110.3 if we closed above that on a daily closing basis, and then revisit it at the 112 to 114 range up here, right? 113 to 114. Sorry. That's it. So let's go and see what Cornell 09. Let's look at ZEC. Okay, probably ZEC USDT? USDT? USD? Huh? Is there a Bybit chart on this? Yeah, let's just go to the perps. How do I do the thingy on this? Here we go. Okay. So let's look at ZEC, right? Now, I am going to put VWAP on this bad boy. Yeah, you're under the VWAP right now. If you see, historically speaking, every time you get under VWAP, you take a nice dump, right? You get under VWAP, you take a nice dump. You get under VWAP, take a nice dump. You're getting under VWAP. You might have already taken the dump, but you're getting a rejection here. You might take a nice dump, right? So let's look at this from the daily time frame perspective. I'm going to take VWAP off, and I'm going to put my moving averages on, my 200, my 50, 100, and then obviously my 21. Oh my God, dude. Look how overextended you are. From a market structure perspective, dude, you are absolutely so far out of anything that makes any type of sense. Oh my gosh. Buckle up, dude. This might be a friggin' wild ride. Let me get the magnet tool off of here. mean, this was your previous high. This was your swing low. This was technically your swing low. Then you crack that high. You come all the way up here. This is your new swing high. This is your new swing low, right? So 123, 124. You come up here, you crack again. This is your new swing low, right? This is your new swing high because you cracked and you got that high. But you do have a pretty close to a topping tail candle up here, right? And if you don't know what a topping tail is, it's just basically saying, look, this candle shows a lot of trading volume and a lot of price action. All the way from $311 to $245 is what happened inside of this candle, right? That's how big of a range it has. And here's the thing about it. This would, if this closed way up here, that would say, yeah, bulls won because they kept this uptrend going. But it receded, it closed red, and it closed towards the bottom end of that channel or that candle, right? So this is almost assuming, now you do have volume falling off, you do have the candles getting smaller, right? And the wicks getting smaller. So you could see a turnaround here, but I think that's going to for sure be determinant upon Bitcoin, okay? So would you short? No, you should have shorted here at the swing failure pattern on this. You let it pump up above it. As soon as it starts fading, you get back under this. You had a long time to start shorting down and you would be in massive, massive profits right now. Now, one thing I can say is as it sits right now, are you shorting? No, you're not, right? You want to see it take out this low and then a lower high, right? And that's when you start shorting, okay? So that would be my advice on ZEC USD right now is to wait until it confirms, right? Because you haven't confirmed anything yet. If you turn around right here, that's just a higher low and you're going to rip back to the upside. So from a market structure perspective, does it look prime for a short? Absolutely. You're so far out on any moving average that matters, right? You're so far away from your previous low. Your previous low is at 188. You're at 235, right? So like you got your topping tail candle up here. You got your volume falling off. That could be bullish though. Like your volume falling off right here, that could be bullish, okay? Because what you want to see, I mean, this was insane volume, right? This was insane volume. And that was an uptrend volume, right? So when that volume starts to fall off, as you can see right here, you get another nice pump up, right? So we'll see what happens with ZEC. But if you want to see some crazy trades, check this out. We entered on Goldman and we absolutely killed it. I called this trade out literally yesterday, said, look, as long as we close this candle above here, we just enter on the back test of this parabolic parallel. And guess what we did? Exactly that. And all you do is you target about $4,200. Worst case scenario, you target $4,150 and you call it a day. These are the trades that we're giving out inside of the Nordic Alpha private VIP trading room every single frigging day, man. Every single day. You can see crypto. I already posted my crypto video today. You can already see my metals. Look, gold killing it from yesterday's, our gold long is killing it from yesterday's video. Silver levels are starting to hit. We might see a nice little short setup on silver right now. And look, it did. This is what we were talking about. We rejected the 2.0. We see a nice little move downwards. We'll see what happens. But here's the only thing. Don't just go and blindly short silver because I said this, because there is something else happening here that I can't tell you about because obviously it's a trade that we have set up inside of the private VIP trading room. So if you want access to, that trade, perfectly fine. Go get in the VIP. It's the first link in the description, but I can't tell you because it's not fair for me to tell you this for free when everybody else is paying for it and then making actionable money off of it, right? So I can give you the real deal Holyfield, right? But I can't give you everything, right? So for, all intents and purposes, we get up above that 2.0, man, we're longing all the way up here to about $52. We get a rejection at that 2.0. All we're going to do is this. Short it down to the 1.786 fib and this double bottom, right? Now, will we have to? I don't necessarily think this trade is going to hit. And again, my reasoning and basis and bias behind that is inside of the Nordic Alpha private VIP trading room. So with that being said, I don't see anybody saying, asking for any other analysis. We kind of understand what's happening with Bitcoin right now. because let's be real, Bitcoin, it could be rolling over very soon in a big way. It could be rolling over soon in a big way. Let me get back to the perpetual chart, right? And as you see, it's already kind of starting to reject here, right? 109,652. We'll see what happens, man. I'm not saying that it's guaranteed to reject here. I'm just saying it's got a higher likelihood of potentially going down than it does going up right now. The momentum seems to be downward. So I will see you all in the next video. I have one ask, okay? If you want those actionable insights, if you want to actually take the trades with us and actually make money and not be dependent upon me just randomly streaming at 12 p.m. on a, what's today, Thursday? Get in the private VIP trading room where everything is super structured for you, man. Nordic Alpha VIP trading room. I promise you it's less expensive than 99% of other trading rooms out there. And we're giving better calls from somebody that's actually a verified pro trader that has a live tracked and documented win rate that's 88%. I'm not going to sit here and try to sell you on it. I'm just going to tell you the facts. Those are the facts. If you want to get in some other dumbasses group that's not a pro trader, that makes all their money off of that doesn't trade, doesn't have a documented win rate, have at it. But good luck to you. That's all I can say. Because I know over here, if you go in there and you ask people, have you ever had a week where you had a net loss? They're going to say no. Never. That's all I can say. If you're here on YouTube, please go subscribe to my other Drew Wolfer YouTube channel. It's Drew Wolfer Official. It's in the description below. I appreciate everybody so much. I appreciate seriously your support, the love. Where are you trading silver? XAG. Okay, so that's actually a really good question. Edge clear futures. Edge clear futures. It'll depend. It'll depend. Here's one thing I will ask you, Paul. If you can type this in really quickly before we sign off of here. Are you a U.S. citizen or are you abroad? Because that'll change things for you, right? U.S. citizens, we don't get to trade CFDs. We don't get to trade spot. It super sucks, but it is what it is. So what we do is we trade futures contracts, right? Minis or micros, depending on how much money you have. But you don't really need more than a couple $1,000s, maybe even five grand to trade gold and silver. I use a VPN. Don't know what that has to do with anything. It's about your ID, my man. It's about like, where's your ID from? This ain't crypto. This ain't crypto, man. This is regulated by the CME, is regulated by the SEC, FINRA. They don't mess around. You're not going to be able to whip out a Palau ID and say, yeah, you know what I mean? Yeah. So I would trade futures on CME, and it's the silver charts, and I'll show you which ones they are. I actually have a training that's coming out showing people exactly how to do this, exactly how to trade like silver futures, gold futures, commodities futures, metals futures. I'm literally going to charge like 10 or 20 bucks for it. It's not going to be like a heavy lift for anybody, but I'll show you exactly how to do it. So silver futures are right here, SI1 plus or exclamation point, right? That's your silver futures. And then your gold futures are going to be GC, right? GC1 exclamation point, right? And then obviously if you want to get into the equities markets, you just go to ES, right? That's your S&P. Then you've got NQ, right? Which is going to be your NASDAQs, okay? So I would be trading minis. I wouldn't be trading anything else other than that. If I'm you and I'm not screen sharing, and I apologize for that. That is my fault. This is NQ1 right here, E-mini futures, right? Then you've got ES, which is right here, E-mini S&P 500 futures. Then you've got your GC, which is gold. And again, gold futures right here, mini futures, right? That's what you want to be on, okay? And you just want to be on GC1, right? Same thing here, SI, whoops. These are silver futures, SI1 exclamation point. Make sure you're trading the minis, okay? Yeah, that's that. That's how you do it. Do not trade the crypto silver coin, bro. Do not do that. Do not do that. I highly recommend not doing that. I am purposely not going to tell you what that coin is. If you want to chat GPT it and you want to go down that rabbit hole, have at it, bro. But do not trade silver inside of crypto. There is no liquidity, bro. You are going to get absolutely murdered. Yeah. Yeah, I would not trade silver inside of crypto. Maybe you could trade gold inside of crypto, and I'll tell you what that coin is. That's PAXG, P-A-X-G, and that's Paxos's gold coin. Please, dude, for the love of all that is holy, do not trade silver inside of crypto. My man, I appreciate you, bro. You never know the answer until you ask the question, right? So I'm glad that you asked because, yeah, there's no volume on there. There's no liquidity, and you will just get absolutely murked. Plus, here's the thing about trading futures, okay? Futures, and this goes for Bitcoin too, like just like user whatever up here, is shorting Bitcoin via the SBIT, right? So if you do this inside of futures, right, which is, I'll show you the Bitcoin futures. Give me a second. Obviously, I am not screen sharing yet again. Give me 1 second. Sorry. Bitcoin futures right here, right? So the good thing about futures is BTC1 exclamation point. You want to go for the minis again, right? Always go for the minis. Gives you the most liquidity, gives you the most ability to get in and out quickly and leg in and out of your trades with take profit levels, things of that sort, right? If you're trading futures, 60%, it's a 60-40 rule. 60% of your profits, no matter what, get counted as long-term capital gains inside of the United States, and only 40% get counted as short-term capital gains, which in other markets, 100% of your profits get counted as short-term capital gains if you've held them for less than a year. That sucks, right? That's why I recommend futures for commodities, especially for U.S. citizens. And secondarily, futures are regulated by CME. So you're only trading on the CME, right? With ES and S&P. I think Bitcoin is on the CME as well. And then for GC, you're on COMEX, right? And same thing with silver. If you're on those, you've only got one pair and one contract that you can trade, right? Obviously, there's other contracts, right? December, January, February, whatever. But if you're trading on GC1, SI1, cool. My point in saying this is that if you are trading via that broker, you don't have to worry about exchange volume, right? So for example, you can trade PAXG on Kraken. Is the volume good enough for you to get in and get out? I don't know, right? Because you can also trade it on Bybit. You can also trade it on BitGet. And all of those different exchanges are going to give you different prices, different fills, and different volume. So when you're trading on these exchanges, you have to realize you are not trading with a regulated broker, and the volume is not the same across all exchanges. It's just what it is. So with that being said, I appreciate everybody for showing up. Make sure you subscribe to the new channel. Seriously, it's Drew Wolfer Official. It's down in the description. I will see you all soon. Thank you so much for showing up. Have a wonderful day, everybody.